it doesn't matter what style of trading you have, no one can predict the market 100%.
Even if it looks like it's gonna work out in those scenarios, don't do it. It's not gonna work.
See that it works, a lot of
Right.
traders, especially in the beginning, jump from one to the other. They want instant results.
Hello, everyone, and welcome again to another Hola Prime podcast. I'm joined again by Richard and Michael, who the viewers will be aware of from previous podcasts. Today, we've got a really special episode for you guys because we're actually going to be breaking down and showing you what we would call the trade of the week. So each three of us have picked a particular trade that we, I guess, fits in with our strategy, and we're going to be breaking it down, showing you guys, why we would have entered, where we're going to set a stop loss, take profit, all the good stuff that you'll obviously want to know. So Richard, Michael, thank you guys for coming on. How are you guys doing today?
Yeah, of course, of course. Thanks for having me back. I really appreciate that. Doing absolutely awesome.
Good to hear.
Same here, all going really well. Thanks, Sam. And hello,
Awesome.
Michael. Nice seeing you again.
Hey, you too, Rich.
So I hope the trading week was good for both of you.
Yeah, actually, it only took one setup this week so far, which it set up on Monday, which is super rare. So I couldn't believe my eyes when it actually set up. I looked at double checked the time. I'm like, is today Monday? That's crazy. This normally ha doesn't happen,
It
but
happens, huh?
cool. Yeah, and they're good at sneaking those trades in there sometimes when you least expect it, but I was ready for them.
Absolutely, absolutely.
Same here. I actually had one on Tuesday, so with my setups, they can occur on any day.
Yeah,
Normally
Right,
during a
same.
specific time window, but I actually missed the trade, but I'll be happy to show you guys today.
no problem.
The technique that
Perfect.
I follow, and obviously what I should have done, should have, could have, right?
Right.
Yeah, we don't always catch them all, but that's part of the game. So all right, I guess we'll go straight into the nitty gritty. Michael, if you don't mind, if you want to share your screen, break down the trade, and
Yeah.
yeah, take it from here.
Okay, sounds good.
Awesome.
So I am sharing my screen now. Let me know if you guys can see this.
Uh, Not
Is
quite
it
yet.
coming up?
I'll let you know when. Perfect.
There we
Okay.
go.
There we go.
Yep. Okay, perfect, perfect. So this is my template. This helps me actually see exactly what I'm looking for in essence. This is on TradingView, obviously, but this is just
Mhm.
a template that I had someone build out for me. Um, Cool. So getting right into it, right? So last week, which was the 7th on Friday, and those of you who don't know, I think if you missed the last podcast we did together, I mentioned that I follow order flow and along with
Yeah.
the market maker method, right? So the market maker method, in essence, it's pretty much a pattern, like a market structure that I'm following. And in essence, it kind of looks something like this, right? So you have the M at the top for the peak, you have
Hmm.
the break, you have the retest, you have the break again, you have the retest, right? And then that final break here. And then you have basically the peak going the other way, right?
Yeah.
For me, and excuse my drawing here, I'm not great with this little doodle thing here, but I'll just put peak here,
Hmm.
right? For me, I'm staying away from the peak. But my two main setups here, guys, is one, it's right here. This is what I would call L1,
Hmm.
level one.
Mhm.
And then I'm also very interested in this part here as well, which would be for me, right, level two. Then
Hmm.
at the very bottom here, you have the peak again, which, as I mentioned, I'm staying away from. For me,
Yeah.
this is super dangerous. A lot of traders, they try to catch that bottom and that top,
Yep.
and this I stay away from. I'm only interested when the pattern is locked in, so about here, right? So I'm only interested in L1 trades and L2 trades for me. I'm staying away from the peaks here. So to erase all of this, you can actually pretty much see this right on the chart, which was pretty clear. So for me, just looking at it right away, I can see this 5200 cross that signifies that the pattern has been locked for me.
Yeah.
And then if you can kind of see this here, you got that first M, right?
Yeah.
That we were looking for. And then you have this movement here, right?
Mm-hmm.
And then in essence, you have this movement here.
And then the
And if
peak.
you don't, if that isn't crazy,
Yeah.
that's exactly what I'm looking for, right? So in essence, as I was
Beautiful.
mentioning, I'm interested in this and I'm interested in this, right?
Gotcha.
Just kind of how I just pointed it out. Now, for me, this is, I'll say this one is a little bit ugly.
Yeah.
So I'm not too interested in this one, but oh my, this one here is good to
Mm.
go. So this is actually the setup here. Now, this happened last week, this M peak here. This was on a Friday as well. I'm not too fond of taking trades on Friday like that. And yeah, I just stayed away from this one. So breaking down the actual trade that happened on Monday, right? I will kind of mark this up for you guys. So boom, that would be it right
Oh yeah.
there. That's the beauty, right? And just to kind of point it out a little bit further, so as mentioned, I have a 5200 cross here, right? And then I have I'm gonna separate these two with like this line just to uh, kind of separate the two.
Sure.
So in my process, as I mentioned, remember, so the W here, I know that after I see the M, which is here, right? The next move I'm looking for is right here, that L1 trade, right? So when I break this down and I'm pointing it to here, what I'm looking for is, let me erase this so it doesn't get too cluttered. So what I'm looking for is next is this, I'm looking for this 1350 cross here, right?
Right.
And then I'm looking for this next set here. Now, one could say, hey, why don't we take the trade here, right?
Hmm.
But the thing would be, I'm more or less looking for, I like what we call two legs. I don't really like one leg. And this is a perfect example of why I'm more interested in the second leg because the first one can just play around and it will end up not going. Case in point, right here, right? You would think that you
Yeah.
would put the stops here, target would be here, get you a nice 1 for 1 in there somewhere, and
Hmm.
kind of carve out your piece of it there. But again, I wait for this, and one, this happened at 3 o'clock in the morning, as you can actually see. So I had the luxury of not even being up to see this. So by the time I came back in, um, around typically around 8 o'clock, and I can kind of see this hovering around like this area here, right? Now at 9 o'clock, pretty much is when I like to get my 4 hour confirmation, right? So not only do I like to see this pattern and actually know where I am in this cycle, I also like to kick it up to the 4 hour chart, right?
Sure.
So I want to see some higher time frame confirmation as well, right? So in here, as long as price is below the 13, since I'm going short, I need price to be below the 13 for this,
Yeah.
right? So this first one happened at again pretty much when I was asleep in essence, but this second one, so I'm gonna delete this one actually to not confuse us. Uh, but this second one here, this is nice. This is what I would call a nice shift candle. Price is clearly below the 13.
Yeah.
So in essence, I'm loaded up, I'm ready to go short as long as my pattern presents itself, right? So along here, let me, so to kind of differentiate the two as well, at the top here, I have the charts, obviously, and then at the bottom here, this is my TDI, my Traders Dynamic Index, right? So on here, simultaneously, I want to see. Well, I don't know why I wrote chart like that. Anyway, you guys get it. In addition to me taking this here, putting my stops above here, right, and my target being here, I also want to see the market baseline, which is this yellow line down here on the TDI.
Mhm.
I want to see it cross this 50 static line at the bottom, right? Which it did. I got my first leg here, which is this portion here. And then I got my second little piece, key piece here, right? Where and just for clarity, the purple line and the pink line needs to be above the yellow line first, which is the market baseline,
Hmm.
and then come
Mhm.
down. And that's exactly what it did here, right?
Right.
So once these two go above on the TDI, I'm ready for this. I'm ready for this move to happen now. So in essence, just to kind of dig it a little bit closer, and then I'll throw these lines on here too. Uh, so once this one crosses below the 13 here, my stops will go above the swing point. So not here. This is dangerous, right? This
Yeah.
can easily come
Mhm.
up and wick you out. It needs to be
Yeah.
above the second one. Right? So stops are above. Whoops, lost my pen there. So stops above here, right? This one doesn't count. It's risky. So
Hmm.
take that away. And then my take profit is here, right? And if I throw my strings on here, you can see if you entered here, stops are above here, right? Nicely above there. And then you can carve out you a nice, pretty much a nice 1 for 1. You would want to get
Yeah.
a slight pullback here, not just take it
Mhm.
exactly at the entry. Typically, what I do is I'll put this is a B setup for me, right? So I've got 5 setups in my playbook. This is a B setup. On my B setups, I typically put on half the position as soon as the candle closes,
Hmm.
and then I will throw in a pending order for the second position just for a slightly better entry there.
Sure.
So typically you will want this to be on the second position. You want to be a little bit higher, right?
Yeah.
For that
Yeah.
slight pullback to the 13 EMA there and smack it right there. And you're
Nice.
golden from there, right? And yeah, in essence, as it's going deeper and deeper, once it gets about halfway for me, that's when I'll pretty much move my stop loss to break even.
Hmm.
I would
Mhm.
take either a quarter or a half of it off, right? So I would close one of my two half positions, and I'm trailing it until the end of the day.
Nice.
Now there are instances where this would keep on going down. So I don't just, for me, I don't just, hey, it's at my this dotted blue line here is what I would call the blue tracer, which is the yesterday's low.
Hmm.
Mhm.
I don't just take my full position off there because, man, there's been times where you do that and this thing just keeps on going down, right?
Yeah,
And you're like,
absolutely.
man, I should have stayed in that. So this is the epitome for me of letting the winners run. Um, but in a case like this, I close half the position, move the stops to off to break even. So I book some profits, which would be one of the three things. I take the risk off the table, which is two to three things, and then I'm also my other half of position is still in the market, just in case that thing decides to, you know, to
Yeah,
continue to
no,
Of
run.
sure.
course.
Yeah, so I like to think that with that ideology that there's, you're killing three birds with one stone because
Yeah.
typically there is something that traders, kind of struggle with, like, hey, do I move my stop loss to break even? Hey, do I take some partials? Hey, do I, just let the whole thing run? With this style, I get to do all three of them at once. And yeah, that's pretty much it. This went pretty well. What time was this? So yeah, as you can see. So anyway, for me, no matter what happens, just that little key piece as well. At 355 for me, no matter what, this thing could be up 6R. I'm gonna close it because I
Yeah.
don't like to have my position. I don't hold it to the next Asia session and pay
Yeah.
that
Yeah.
swap fee, or I don't want to risk that gap taking me on at break even or taking majority of the profits that I just made for the day.
Yeah.
So no matter what, I'm closing it at 355.
Gotcha.
Um, and yeah, this was my setup for the week. We call this one the money trade. It was two legs here,
Hmm.
right? Again, this was the first leg, and the second leg was the one we actually took. And yeah, this was a banger. This ended up working
Very
out great for
nice.
me.
Very nice. I mean, yeah, it looks like a solid setup. You're definitely, you know what you're looking for. You're patient, and you know when
Yes.
to pull the trigger when you do see it. So absolutely. Yeah, I really like it. I feel like it's definitely something viewers, in order to kind of learn it, would definitely need a much more in-depth
Oh, for
session.
sure.
So if you're willing one day, to do like more of an in-depth, I think the viewers would definitely like that. But we'll do that obviously in another episode.
Yeah,
But yeah,
yeah.
some really, really good stuff you've shown here. Awesome.
Oh, sweet,
Very
sweet,
nice.
sweet.
Like it. Like it.
Yeah, I'll definitely be open to that. This is definitely something you want to, it's gonna take some eye adjustments to really see this. But yeah, that's what nearly a decade of practice and all of this and
Exactly.
bumping your head against the wall and failing get you.
Yeah.
You finally get to see this.
Exactly.
School
So
fees.
yeah, definitely. So for the viewers, if you'd like to see Michael, break down his setup, like you said, he's got many different setups as well. So this is just one of many. If you'd like to
Yeah,
see that,
yeah, yeah.
absolutely let us know. How he arranges his charts, every indicator, settings and stuff, and what he's looking out for. We can make a much more in-depth video for that. But yeah,
Yeah.
absolutely fantastic job, honestly.
Sweet, sweet.
Very good.
Thank you.
Richard, it's your time for the hot seat.
Let's do it. I've already marked my charts up a little bit here.
Good.
Just share my screen. What's that? Screen one. And can you guys see that?
I can see it.
Yes, we can.
Awesome. All right, so I like trading the Nasdaq and the ES. Also, I really like trading crude oil,
Hmm.
but particularly like the Nasdaq and the ES with a strategy. And what I did was basically, and this is on a 5 minute time frame, also trade with a 1 minute execution time frame. You can see my charts a little bit cleaner, not so many indicators. I do use overlay indicators like volume, for example, to help me get into trades. I won't be
Hmm.
showing that today too much, but there's quite a few set things that need to happen. So it's like a very methodological type of approach. But you'll see these actual vertical lines here. This was last week, Friday, on the Nasdaq, again on a 5 minute time frame. This would have been Monday, Tuesday, Wednesday, and that was yesterday, Thursday. Now, these arrows, as you can see here on the Nasdaq, again, just on the 5 minute time frame, you had pretty significant reversals
Yeah.
where
Hmm.
these arrows occurred, right? Now, I didn't just go and cherry pick them. They actually do occur during a specific time window, which runs between 9 a.m. and 11 a.m. Eastern. So I call the strategy the morning liquidity sweep. There's also a variation of it where you call them the liquidity run. In essence, basically, is either when it's like the big boys trading or whatever, they tend to run stop losses
Hmm.
or they target highs and lows, overnight sessions, Globex sessions, previous days high and lows, whatever the case might be, to then fill the opposite orders, which is quite often what happens in the markets. All right. So the focus that I want to draw your attention to is this trade that happened here on, when was it? Tuesday on the 11th. Was it 11th? Well, that was actually, yeah, Tuesday. As I say, it was a really nice reversal up here, but that was after the CPI numbers. Again, also during a specific time frame. Again, just know that all of these happened between 9 a.m. and 11 a.m. Eastern Standard Time frame. All right. So a
Mm.
lot of these actually gave beautiful reversals, but they did not actually fulfill all my trading rules. So again, that's why I want to focus on this one. Unfortunately, I actually missed this. Was they marked my charts up? They actually had a setup after the time frame. At this stage, of course, it's Eastern time and I'm in South Africa. It happened like an hour or two after I've already gone home. All right.
Yeah.
So give you a quick rundown. So what I first do to start a trading day before 9 a.m., like 10, 20 minutes before, and make sure that I'm not trading into any news events. And
Mhm.
I'll then go mark the start of the day, again, on using the Eastern Standard Time, which my charts are set to here. And then I would go and define or mark up let me just grab that, the 9 a.m. marker. There we go, as well as the 11 a.m. time marker, all right? So what I wanted to see is a setup occur during that time frame. Now, quite often I prefer to trade during that time frame or get into an actual trade if it actually sets up. But there'll be instances, and this is a really good example, where afterwards, price actually tested an area that I would like go and define, like it did over here, and then give you a nice little run to the upside. In this case, a reversal back upwards. So what you want to do here is once you mark your charts up, and obviously on the right-hand side of the chart, this is what it will look like on the day. Now, as price then enters to that, it actually on the 9 a.m. mark, it actually reversed to the upside. But obviously you won't know that it is actually reversing. That's where you can use volume, momentum divergences, and those sort of things to, build an extra case that the market might be reversing. So what I quite like to do is then, this is why I have the starting line over here. Go and mark your overnight session or the Globex session highs and lows. Let me just grab a horizontal ray there. We could say that the opening, for example, was over there. And then as price then approached, it broke this overnight session low over here. All right. Now, what I want to see is price then first break one of these sessions, highs or lows, depending on what direction the market's obviously moving in. And it has to happen, in this case, right at the beginning of this time trading window that I want to trade. So that, how can I say, rules also been fulfilled. What even makes it even better is if a lot of times you'll have a very strong trending market. It's already broken a previous high or low, depending on direction it's moving in. And you've got no clear sort of high or low during the Globex session. This is a perfect example where you can then go look at a previous day or previous trading session, and especially when you see a cluster of highs and lows. For example, what happened over here, you can see it's quite a lot of a cluster where the people's got their stop losses there, whatever the case might be. This is just a really nice setup to typically get these reversals after price takes out like a cluster of highs or lows. Right, so let's just take this one off. And this is how I have the charts marked up, knowing already where these levels are prior to price entering the 9 a.m. mark. Okay. So that's all done on the 5-minute time frame. So thus far, you can see behind this purple line at the moment on the 9 a.m. market actually ran that low or those clusters of lows, and you've seen a reversal back upwards. Now, the next step is that you want to start seeing a change of character, change of behavior, or break of a previous price structure. So, as you can know, probably already, you guys are pretty geared up with trading anyway. What I mean by that is, let's say you have low lows, low highs moving into that low break of a high or low of previous session or current session. You want to then see a move that breaks that previous structure. So change of character, again, just an additional confirmation that price might actually be getting ready to, reverse back upwards again. And it's at this stage where I'll then switch to a 1-minute time frame, which will be my trade execution time frame. I just want to go find that exact day again. Wasn't that one. This was actually that CPI numbers that came out.
Yeah.
Again, there we had a digressing a little bit, but also right at the 9 a.m. mark, a massive reversal back upwards again.
You don't want to be caught in that.
Right.
No, I mean, although the strategy would not have caught it anyway, because the market just ran too quick. Again, so all of these steps need to follow each other. If one of them's missing, then I just don't take the trade. Simple as that. All right, so on the 1 minute, you can see that price structure was actually over here, the previous price structure where the change of character occurred. Let me mark that off. It was around about the 9:30 mark. The price actually went ahead and breaking that price structure. So that's another step that I need to see. And then additional step right after that on a 1-minute time frame, I want to see a clear fair value gap that formed prior to the breakout. Sometimes, you can use a bit, it's not always going to set up like this, You might have a fair value gap pretty large down here, but quite often the sweet spot I want to see is that momentum breaking that previous price structure after breaking that low during the time window with a nice fair value gap occurring during the breakout, then you pretty much got all of the elements in place then to take a trade.
Yeah.
Right. Again, I'm not showing. I'm going to be actually hosting a live trading event on Monday. We'll be going through this. And again, you can see there was quite a few reversals, as I've shown you during the week, but only this one really actually set up according to the rules. So if I'm doing this on Monday, there's no, 100% guarantee that we're actually going to get a setup. But I think just for today, it's great to see what it is I'm actually looking for. So
Sure.
ideally during the trade window from 9 to 11, let me just go and find my path marker. Here we go. You want to then see change of character. You want to see a fair value gap. And then obviously, ideally, something like a test like this and a rejection and take a
Yeah.
trade. I'll be quite aggressive with this because the stop losses generally are pretty tight. For those that do not know what a fair value gap is, it's basically a 3 candlestick formation. It can occur all over the show. So you can't just go ahead and trade fair value gaps. It's for me very important where they actually occur. In this case, as part of a trading strategy, it helps me determine my trade location, as well as where I'm going to place my stop, which then inevitably helps me decide what my target should be. I generally like to go for 2-to-1 to a 3-to-1 risk-reward ratio.
Nice.
Right, so you can see here, and this is the end at 11, we did not get a retest of that area over there. But what I'll typically do, this is more than allowable with a strategy. If you extend this to the right-hand side,
Yep. Go
you
on
can
the next
see
day.
that about an hour and a half afterwards, beautiful test of that area, and you had a rejection back to the upside.
Oh, yeah.
Now, you can, we're talking about the NASDAQ here, it can move really, really fast. Whether it's like news events or not, sometimes it can move really fast, right? So what I like to do is actually have a resting order, like I would have a buy limit order at the top side of the actual fair value gap, in this case for a bullish trade to the upside. And I'll immediately also know where I want to place my stop. And just to get that drawing tool, I'm not using TradingView at the moment here. I'm just going to use this price range. Since this is the upper side of the gap, I'll have a resting buy limit order there. And my stop loss will immediately go below the low, a few ticks or pips, however you want to call that, below the low of the first candle that created that fair value gap.
Yes.
Right, so in this case, you're looking around about a $22 stop loss. And when it actually comes to the trading side of things, I'm do very similar stuff to what Michael does. I'll trade and take half of my position off. Let me just get another marker over here. What's it? 22 ticks, just roundabout, okay? And I'll have that as my first target. All right, so I take a 1-to-1 off. Let's say I'm trading 2 contracts. If you do the futures, obviously using lots here on Hola Prime's platform. You'll take half of your lots then off at a 1-to-1. And what I generally like to do is then rather than going to break even with my stop, I do like to give the market as much space as possible to try to prevent getting stopped out too often. And then move my stop, which was originally over here. Let's make it a different color quickly. Make it nice and bold, like red. I'll then move that midway of what the distance was originally. All right. Then above that, I'll have then a 2-to-1 target. As soon as you're 2-to-1 or sometimes 1.5, it really depends on what the market's doing. In this case, it flew really strongly back to the upside. I'll then dynamically start trailing my stop to break even. And generally when it does hit a 2-to-1, I can either decide to get out, or as I could see, it also depends on how the market's behaving. You see, it pretty much made a 3-to-1 run there. But since you're obviously, getting out of a contract, it's not really a 3-to-1, pure 3-to-1. You've actually been, it's averaging yourself out.
Sure.
But what I like to do is when you do see a strong move like that and it hits a 2-to-1 ratio, you're already at break even at that stage, then I'll start trading my stop below a low of a candle that made new highs. So you can see here, this is just like a dynamic type of exit. Price hits a 2-to-1. Once it hits that, stop goes below on the remaining contract below that candle. The next one closes above the previous candle's high. This one doesn't, so I don't move the stop. It was only around about here, a very good example. Picture perfect, actually. Let's just get rid of that. It actually did close a little bit higher, and your stop would then have moved there. Obviously, this takes a lot of discipline. If you have to be somewhere, then I probably would have taken, my profit off there and so forth. But
Sure.
if you just followed the way that I dynamically trail stopped, it was pretty much a beautiful 3-to-1 run
Yeah.
excursion on that trade. That's pretty much what I
Nice.
do. Again, like I mentioned, it's a very methodological, step-based type of approach. A lot to do with price action, obviously using fair value gaps as your trade location, and so forth, dynamically trading multiple lots, getting to a position very quickly where you limit your risk as soon as possible while trying to give the market as much space to move in without getting stopped out too prematurely. And if you do get those nice little runners, I mean, the Nasdaq can really, really run.
Yeah. Yeah.
Start trailing aggressively or stops and get out of the position if you were lucky it went your way in your direction, all while using a pretty tight stop, which again, there's a lot that needs to happen for me to execute a strategy. And it would be sometimes, if you're lucky, let's say 2-3 trades a week, but split that between the ES and the Nasdaq. They could be a bit more. The ES and Nasdaq obviously follow each other in price action pretty closely, but there are sometimes instances where you get a fair value gap on the ES and you don't get it on the Nasdaq, and then you could switch between the two and get
Yeah.
more trade opportunities like that. So that in essence is it. Like I mentioned, also use some other indicators, but I'll explain it a bit more on Monday when I actually do the live trading session.
Awesome. No, really, really good. And like you said, on Monday you will be doing a live trading session, so there will be a much more in-depth, I guess, in-depth explanation of how you do it and how you trade. So definitely tune in for that to anyone watching. But what shows here is that although both your styles are the different strategies, you both are very disciplined with the actual trades you take. It has to be structured. You're
Absolutely.
not just looking for some random candlestick pattern and just jumping in the middle of
Right.
the night at a random time,
Used
just
to.
hoping for the best.
Yeah, it used to do that. It didn't work out too
Yeah.
well though.
So a lot of the success is being disciplined. No strategy is right or wrong. There's many strategies out there that can make you profitable as long as you're disciplined with it. And that's really, one of the big key takeaways. So awesome stuff. I will go ahead, share my screen. Now,
Yeah, that was awesome, Rich.
that was
Thank you.
really
Thank you.
good. My bad. Okay. See my screen?
Yes, we can.
Perfect. So
Very
sadly,
cool.
I have been traveling all week and I only managed to take one trade. um, so I only managed to actually take one trade. That was back in the 11th. I missed many good opportunities, but I just haven't been on the charts. I've been traveling to all the Ola Prime offices. That's the CPI right there you were talking about.
Mhm.
Where is the trade? Oh, there we go. So this is the 5-minute chart. This is on the 11th. Now it says 4 o'clock, but this is broker time, so it would be 9 a.m. US time. Okay.
Yeah.
So I opened two positions, and I'll explain on TradingView because I only use MetaTrader to actually execute. Probably should have held in hindsight, but I'll explain why I got out at pretty much not the worst point, but the first take profit point, so to speak. And sadly as well, I didn't see, normally I break up my positions into 4, so quarter, 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 quarter. Only managed to take 2 positions on this one. It wasn't the best setup, it wasn't the clearest, but I just happened to see it. It was the right time. I pulled the trigger. It worked out, but there are better setups normally, and in other podcasts or in other sessions, I'll go deeper into them. So I'm going to head over to TradingView. Hopefully, can you see my TradingView screen?
No.
Not yet.
Okay, I'm going to have to switch it. Bear with me. I'm going to hit stop share real quick and then share. Can you see TradingView?
There we go.
Perfect.
Yes.
Okay, so this is the S&P 500 futures, and on MetaTrader, it's a CFD broker I use. So I'm actually executing just on the S&P 500, CFD. But either way, the charts are pretty much identical. So first things first, I only really ever trade, obviously S&P 500 being a indice. I only trade, when the US market opens. I'm not interested at any time before that. And you can see in the volume at the bottom here, there's a clear every day. When the US opens, That's where the volume is. Before that, I'm not interested. So it was on the 11th. It was right here, this little, and very similar to Richard's strategy. I'm looking for basically a trap, right? And you can clearly see we were in a bit of a range. It dipped down and then it spiked up. So I'm always looking for that kind of, where are traders nervous, right? Imagine you sold right here. You're going to be very nervous as it starts moving against you. So I'm always trying to look who is nervous in the market around that kind of liquidity hour, right? So I'm basically using volume, the volume profile, the daily volume session, which are these bars here on each day. And I'm looking for, where was the highest volume on previous days and where are we now? So we got this clear, big chunk of kind of heavy volume here. And you can see we're kind of in the next day, we're on the day where I took the trade. You can see we're kind of, in and out of it, but around that sort of area, building up volume. It's clearly ranging. So I am looking for something to happen around here, right? Breakout between one of these. And I want to see something extreme happen, okay? Not just slightly, but extreme. And to do that, I drop down to the 5-minute and I look at the footprint. So I'm going to just minimize that a little bit. And we can see right here, if I zoom in so we can actually see the orders themselves. If I can just move this thing to the side a bit. Here we go. All right, beautiful. So this is basically the delta within the candle. So there was an extra 193 sellers here, an extra 883. And you can see these numbers getting very big, right? Okay, there's a lot of sell pressure as this candle breaks through, that area of, consolidation, right? So lots of sellers are jumping in here. And okay, we're gonna analyze. Let's see what happens, right? But notice towards the bottom of the candle, what do we have here? We have quite a few buyers now all of a sudden absorbing these sellers, right? Now, there is another tool I use, which is the depth of market. But unfortunately, the depth of market, it looks like this. I don't use the trading view one because it's only one level. I use a different depth of market tool that shows me 10 levels. Sadly, it's not recorded, so I can't show you the depth of market at this time. It's only ever live. So in this example, what you're seeing here, this is happening right now. So this is nothing to do with this candle right here. But essentially, it's showing all the limit orders, okay, all the pending orders from buyers and sellers. And when I'm looking at the depth of market at that time, you can see there was heavy buy limit orders stacked up here. So at that moment, what I'm looking for is, are the sellers going to be aggressive enough to break those buy limit orders? Or are the buyers going to absorb all these sellers, start pushing the market up, and these sellers start getting nervous and have to, and once we start breaking above this candle, they're going to say, you know what, I'm getting out. This is not worth it. I was wrong. They get out. And obviously, when a seller gets out of the market, it prints as a buy order, right? It's the opposite. So we saw this heavy, especially right here, 883, just in this area here. So this is obviously, it could be a collective of people, but when it's on a small price level like that, and it's quite big, it's probably, maybe, I'm not going to say just one person, it might be an institution, it might be, but it's going to be one or maybe two entities putting a big bet right here, okay? But the market's going to push down. So I'm really going to be looking, what happens if it does go up and break above this, when do these people here get nervous and exit their position? So as the market started pushing up, you can see this is all buyers right now. And this is looking, okay, my first indication that this might start going up. It consolidates for a bit. The sellers are still trying to, battle it out. But notice that the sellers are not making much progress, so to speak now, right? The buyers are much easier, the more efficient. They're able to push the market up a lot easier than the sellers are capable of pushing it down. That's another indication, okay? I'm favoring the buyers right now. Buyers are still trying to absorb, the buyers are still absorbing these sellers, more heavy buying. And notice this black line where I put the 883 contracts were sold. So this black line, as soon as we start breaking above this, I want to see some heavy buying. These people getting nervous, And right here, 736, you can see them. They're starting to get out. They don't like it. All those sellers from before, they're exiting their positions. They're getting nervous. And then on the next candle, this is well, pretty self-explanatory. You know, you've got some heavy buying, and it's clearly
Yeah.
institutionalized. It's very well, it's all the same, 902, 902, 902. You can see,
Contracts, yeah, that's
yeah,
it.
orders are just being stacked on.
Mm.
If you're not in the market at this point, you're probably going to miss the move. So this is the point where you want to start piling on the orders. And naturally, it does keep going up until eventually it hits. I think it stops quite high up. Now, in terms of take profit, stop loss. Now, I got out quite early, as you saw on MetaTrader, and that was more, again, more because of the depth of market. I did see a very heavy amount of sellers right here on the depth of market. And as the candle was forming, you can see there's 1,000, 1,000, 1,000, all buyers, right? And I saw in the depth of market lots of sell limit orders here, which could have possibly have absorbed the buy pressure. And I didn't
Yeah.
like how it was kind of jumping and then getting pushed back, jumping up, getting pushed back. I started getting a little bit nervous that this could come back, trying to retest. So I thought, okay, I'm gonna take my profit here, because it was at a previous, it's just a small one, but a previous high. As you can see, the buyers did step in with a lot of aggression and eventually, just wipe out all those sell limit orders, and it just plowed through. And that was essentially it. I mean, in terms of take profit, I don't have a fixed. I have an idea of where I want it to go, but I'll be very honest, very rarely do I hold to my take profit. Because I'm a bit like Bambi. I get spooked very quickly if I'm in profit and it's good, and I see something I don't like. I don't like, holding the retracement. I rather just take my money and get out. Um, and that's why I'm not a swing trader, because I suck at it. Okay. But essentially, my stop loss, I can't remember exactly where I entered, but I think I entered around here somewhere. I put two positions. I think like around here and then another one here somewhere. But my stop loss would have been pretty much, you see where these buyers started entering. My stop loss was around this sort of area. It really depends. Again, it's quite dynamic. I would have a hard stop, obviously below,
Yeah.
the last low. That would be like, if it gets
Right.
absolutely get out. But if it comes back to this area, I'm really just looking at the depth of market. Are there enough buyers to absorb any sell pressure?
Yeah.
Because it can come back, retest, and it can consolidate for a bit. So I'm really just focusing on the raw numbers. If it looks like the buyers are starting to, they're not following through, then I'll just get out, at a small loss or break even or something. I really make the decision in the moment. But yeah, of course, I have to have a hard stop, and that will be down here.
Right.
But essentially, yeah, that's kind of the whole game plan, so to speak.
That's really cool.
But yeah, and like I said,
Nice.
I have to wait for the right time. I'm not looking for this setup in the middle of the Asian session or something, because it's even if it looks like it's occurring, I promise you it's not going to work out.
Yep. That happens all the time.
Exactly. It's really only around this kind of time. I got a 2-3 hour window basically where I'm looking for a really obvious kind of, trap setup, so to speak.
Pain.
And yeah, exactly. Pain. Where is the pain in the market? Who's right now, praying and hoping that it reverses, into their favor?
Right.
That's essentially all I'm looking for. And I hedge against them essentially. But yeah, that's ultimately all it is to it. It's very quick,
Sweet.
10, 20
Nice.
minutes at most. And yeah, I wish I could show a more detail, more clear, because that isn't the best example. Sometimes it's so crystal clear. Sorry, so crystal clear, a 5-year-old could spot it. This one, there was a bit of consolidation, a bit of kind of nervousness from both sides, but yeah, it was the only one I actually managed to take. But yeah, that's pretty much it. So
Nice.
Nice.
Dr.
Nice.
Yeah. So I hope for the viewers that everyone we have different styles, we have different ways of analyzing the market, and ultimately, what's important is having just rules and structure, right? Being disciplined, whatever strategy suits your kind of personality, whatever you feel most comfortable about, go with it, but stick to the core rules. Don't start deviating and thinking you can make money 24/7, well, not 24/7, but 24/5, at any minute of the day, because it doesn't matter what style of trading you have, no one can predict the market 100% at any given time. That just doesn't exist, right?
Right.
So yeah, I think this has been a very good. Any last words, I guess, from either of you?
From
For
my
me,
side,
it'll
not
be
so
like
much.
what
Sorry,
I'm sorry,
we're
go ahead,
talking.
Rich.
You go first. You go first. It's all good.
Okay, well, I was really just gonna piggyback off what Sammy just said is even if it looks like it's gonna work out in those scenarios, don't do it. It's not gonna work.
Yeah, yeah, absolutely.
Having
And
that structured approach, but also it's about confidence in your own strategy, right?
yeah,
You also need to stick around a long time or enough time, or spend enough time on a strategy to see that it works. A lot of
Right.
traders, especially in the beginning, jump from one to the other. They want instant results, instant success, and things just don't work like that. So
yeah,
really need to give yourself that time to then, get used to the strategy, build confidence. I think if you have confidence in your strategy, that gets rid of most of the emotional stuff, right? As well as
absolutely.
enforces that discipline and all those sort of things. Yeah.
And I
True.
completely agree, especially with the confidence part. People lose confidence when they're trading their strategy at, when they're breaking their rules, trading it at any random part of the day, with no real, no real motive of, or no real
No plan.
structure, and they end up losing, and they think this strategy is rubbish. Oh, it doesn't work, and they lose
Yeah.
confidence, and they jump from strategy to strategy without ever realizing it really does depend. Time is a huge factor. I mean, any chart, you have price and time. Why just focus on the price? Focus the time is I would argue almost just as important. So yeah,
For sure. And
yeah,
I'll add too really quick just
please.
to you got to be honest with yourself, right? Because there's times where it's like, oh, the market did this and the market did that, when deep down inside, you shouldn't have done that. And that's why you lost, right? So,
Absolutely.
you got to be honest with yourself as well. The edge, the time, the patience, the discipline, and just being
Yeah,
honest with yourself. If you weren't
Boost the
supposed to do
ego.
it, yeah,
yeah,
don't try not to do that again.
yeah.
All right. But at its core, just be honest with yourself so you can refine your trading plan to do better next time. But if you can't be honest with yourself, you'll never be able to move forward.
Absolutely.
100% agree.
Absolutely. So Richard, Michael, thank you again for coming on. It's been actually really interesting to see both your styles. I'm definitely very, very intrigued, and would love to see, a more in-depth analysis. I know Michael,
Awesome.
sorry, not Michael. I know Richard, you'll be doing the live trading session, so I'll be tuning in for that as well.
Hopefully
So
something sets up. We'll see.
yeah, absolutely. And again, exactly, we can't guarantee a setup. If it doesn't happen, it doesn't happen. But what's important is that in itself, holding back is I think you mentioned that last time, is a form of risk management,
Yeah.
So yeah, absolutely. And Michael will definitely be making some sort of, I don't know whether it'll be a live training session, or a pre-recorded one, or some kind of content going more in depth in your strategy, because
Oh yeah,
uh,
absolutely.
yeah, I would love to know a lot more, with your setup and what you look for, because and I think every trader can learn from others. You don't have to adopt 100% someone's strategy,
Mm-hmm.
but you might say, actually, that's a really good point. Like you know,
Right.
previous day high and low. It might be useful to mark that out and use that with a different strategy, for example. So there's always little bits you can borrow and kind of, I don't know, piece together to kind of create something that
Mm-hmm.
works for you as well.
That's true.
So never stop learning, and yeah, really cool. So
100%.
we'll wrap it up there. Both of you guys, thank you again for coming on. It's been an absolute pleasure,
Awesome.
and
Of
we'll do
course.
this again soon.
Great being here.
So
Thanks,
All
Sam.
right.
Cheers,
thanks.
Michael.
Have a great
Have a good
day.
Thanks,
one.
Sam. You
Take
too,
care.
Good
Rich.
weekend. Cheers.
Bye bye.
Bye-bye.